Imagine you having passive income without having tenants, without having the maintenance costs, without even having the huge mortgage on you. Does this sound interesting? This is what REITs have to offer and many more. Stay tuned. Let's discuss what are REITs and why should you choose REITs as part of your portfolio today. So what are REITs? REITs are real estate investment trusts. These are the type of investments whereby you invest in companies that actually own real estates. So these companies, they might own malls, they might own commercial properties, even industrial properties. You're going to be investing in their shares in the market. And when you invest in this type of shares, you're going to be earning passive income. Just like I said in the introduction, just imagine the fact that you don't have to deal with the tenants and you still get cash flow coming to you. You can get through REITs. So now let's discuss why should you choose REITs. With REITs, you have the ability to get passive income. So when you purchase from the market, you purchase the shares from the market. At the end of every month or at the end of every quarter, the company is bound to pay you because there's a regulation that says they must pay 90% of their profits to their shareholders. So imagine that you've invested $1,000 in the market. You've purchased shares worth $1,000 and there's a dividend yield of 7% on the REIT you've purchased. That means you'll be getting about $70 back every year. This can now be splitted over maybe over the month or during the quarter. Then there's low barrier for entry. So when you look at you buying REITs, all you need to do is just to punch it on your brokerage app. So you do not need that massive capital. You do not need that credit score for you to be able to buy it. If you're buying REIT, no one is saying that, oh, you have this huge debt on you, so you cannot buy REIT. Or this your credit score is very low, so you cannot buy REIT. So it's very low. There's low barrier for you to enter. All you need to do is just punch it on your app. Okay, this is the amount of REITs I want to buy from so and so company, and your order will be filled. Then it offers diversification. Remember that these companies, what they do is they invest in different properties. So there are some that will invest in commercial, in residential, in industrial. Already you've diversified your portfolio, which means if one industry is never performing well, the tendency for the other industry to perform well is there. And you're not putting your eggs just in one basket. And it offers liquidity. So liquidity in the form that you can actually sell your shares at any time. So you can decide, oh, I need this money today, and you go into the stock market. As long as it is open for business for the day, you can actually sell whatever you have in stock. There's long-term growth as well. So your capital would also appreciate. Remember in the example I used where we invest $1,000, the tendency for this $1,000 to grow over time is there. And you begin to imagine when your capital appreciates, you're also getting passive income from your dividend. So when you're looking at what passive income you're going to be getting from your dividend, you need to consider the yield. There's always a yield when you're looking at the shares. When you're looking at the breakdown, it tells you, okay, this is the yield they're going to be paying you, which means that is the percentage of return you'll be getting on your investment. So what are the types of risks that we have? We have the equity risk. Equity risk means that they actually own the physical property. So you see some companies that own maybe 15,000 property. They own different types of mall. There are some that invest in just hospitality. There are some that does industrial. So those are the equity risks. And we have the mortgage risks. The mortgage risks are these are risks that invest in estates, real estate loan and mortgages. So they do not buy physical properties, but they give out the loan. They invest in companies that actually give out loans and give out mortgages for these equity companies to buy properties. Then we have the hybrid. Hybrid means that it's including both the REIT and the equity and the mortgage REIT. How do you invest? Now that you know that it's very easy for you to come into this market, you know the benefit of you buying a REIT over you having a physical property. Now, how do you invest? For you to invest, you will need a brokerage account. In whatever country you're in, there's always a brokerage account. So I'm in Canada right now, and in Canada, we talk about Wealth Simple, we talk about Quest Trade. These are brokerage accounts. So you need to open a brokerage account. When you open the brokerage account, you're going to move your money from your normal banking account into your brokerage account. So if you're in Canada, I would advise you use a tax deferred account, like tax sheltered account like TFSA. So, but you need to check your limits to be sure that you've not exceeded your limit for the year. So if you log into your CRA account, you're going to be able to see your limit for the year. Or if you do not have a tax sheltered account, you can use your regular account, regular investing account to invest. But the difference between you using a tax sheltered account means that you're not going to be paying taxes on your return if you use a tax sheltered account. That's the advantage of using a tax sheltered account. Now, when you move your money into this account from your banking account into your brokerage account, you're actually going to invest in the market. And when I say invest, you're going to buy the shares in the market. So you're going to go into the bank, your brokerage app, and you're going to click on buy shares. You're going to put the symbol of the share you want to buy or the name of the share you want to buy, and it gives you the symbol. You're going to tell them the quantity you want to buy from the market, and you're going to buy those shares. And once you buy these shares, all you need to do is to sit down and wait for your passive income to come to you either monthly or quarterly based on the company's rule. Now, if you receive your passive income, which is in form of dividends, you can decide to roll over. You can decide to reinvest your dividend. And that is where the power of compound interest comes in. Because when you reinvest your dividends, you're buying more shares to you, and you're going to increase that means you have more passive income and more capital in the market. And also, you can set a pre-authorized debit from your banking account into your brokerage app so that you're sure that you're investing on a monthly basis or quarterly basis. Just invest certain amounts in the market. Buy more REITs because it builds as long as your capital is building in the market, then that means your passive income would also be building. So do you think that REITs are good things, good investment for you to go ahead with? And you might be saying, I don't even know anything about the markets. I got you. Because I organize a class where I teach how you can build passive income using dividend shares. So it's not only REIT that you can actually use to build passive income. There are other dividend shares that you can use to build passive income. At the end of that class, what you would have learned, you would have been able to understand how you can look for dividend paying shares, how you can actually invest in those dividend paying shares without having to do a lot of research, because this is what we're going to be teaching in the class. I offer this class every month. You can click the link in my bio for you to see when next I'm going to be offering the class. And you can join the class to learn more about how you can build your passive income using dividends paying shares. So are you looking for a smart and stress-free way for you to invest in real estate, where you don't want to be talking about, oh, the tenant has not paid me